Hello, everyone, and welcome back to the ByzGrow podcast. Today, with me is Aaron Ross, and I'm very excited and pleased to have him on the show. Aaron runs a YouTube channel himself, is very much into the US pre IPO market and the USA venture backed pre IPO companies. He has done multiple transactions and runs a fund himself, and has managed millions of dollars. So, he doesn't need any introduction. You can check out his channel as well. Really fantastic person. It's a pleasure to work with you and have you on the show, Aaron.
Thank you very much, Aryan. I appreciate the kind words. It's good to be with you.
So Aaron, let's just straight jump into it. I'm very excited for this conversation. So, the first question to you would be, uh, what actually drove you into this investing, and what led you to build this Ross Pre-IPO Partners? Can you share us a bit context about yourself and how you got into this space, and can you just tell us a bit about your background and your early career?
Sure. Yeah. So, um, I uh, I grew up in a finance household. My father's in wealth management, and I saw him do deals. I grew up seeing him do insurance deals. Picking stocks, things of that sort. And I've always been interested in investing. And I would say just around 3 years ago, all right, I started hearing these names that I thought were pretty cool, like SpaceX and OpenAI, and these private companies that have obviously turned into something much bigger over the past few years. And I just remember thinking, like, wow, like these companies are private, but I feel like there's some real asymmetric upside in the private market right now. So I was able to just speak to a few different people, and without even trying really, I was able to place a few people into these sorts of investments. And, that was a few years ago. So some of those have generated a nice return. And I ended up just finding my way into the private market. And I'm fortunate just because I don't know if everyone would have predicted it, but the private market is really having its moment right now. That's where all the action
Yeah,
is
definitely.
happening. And it's just super exciting. So what a time to be in the private market. I feel very lucky.
Definitely. So what was some of the? Can you share us like a story or something, an experience that really shaped your perspective and your investment philosophy in your early journey, and some of the obstacles that you had to face while building this Ross pre-IPO partner, because fund management is no easy job. It's a mountain of its own. So can you tell us a bit about your early journey and uh, some of the key lessons that you learned along the way?
Sure. So, this didn't happen too long ago, but I uh, I was raising capital for a company, and just for SEC laws. I don't know how technical I can be, so I'm not going to mention the company, but excellent company. People really hadn't heard of it before, or at least most of my best investors that ended up participating in the investment raised the capital for the company. Super excited about these guys. Months of research and due diligence and finding the right allocation. Deployed the capital, and it was rejected by the company. And I'm like, what's going on over here? We raised the capital. What's happening over here? Where's the transaction? And they said, we're currently going through material changes as a company. We can no longer accept your investment. And long story short, uh, we had an investment thesis. We executed. We raised the capital. We sent out the wire. Didn't work out because Elon Musk and Anthropic are like beating us to it. There's currently a bidding war on the company. So this was like one thing, an experience that I actually think like is shaping me as I continue to grow my business in the private markets. And essentially, what happened here is we raised the capital, we created the investment vehicle, um, and had to return all the capital to our investors. Now, we could have taken that money out of our investors' pocket and essentially been like, okay, you're going to cover fund expenses still, but this is a game of relationships. This is a long-term game. This isn't just about trying to make the quickest buck. It's about preserving good relationships. So we ate tens of thousands of dollars worth of fund administration fees just for our clients so that they can know, like, wow, like every dollar was returned to me on time. Although the investment didn't work out, this guy picked an investment that from, a company that we've never heard of. So I think that's one example that happened more recently of something where it's like, you get kicked in the shin and it hurts a little bit, but it's just it's a small little point of pain in a much longer journey. and I actually see
Yeah.
what happened as a blessing in disguise because one, we're returning all of our people's capital. We've built up more trust with our LPs. Um, and two, there are other opportunities that are coming up right now that I think are very exciting as well. So, you know, we've built a trust with those people. We've proven the investment thesis works, and now we have some very willing LPs ready to deploy capital, which is always exciting. That's what you need in this business.
Definitely, definitely. Sounds interesting. So, while starting out, what drove you into specifically pre-IPO transactions and the secondaries in the private markets? What was that one thing that really drove you into this particular space? Right? Why not something else like a public, like the public sector or the public equities, or something else? Why this particular sector, meaning pre-IPO?
Yeah. So the private market is having its moment right now. All of the growth, all of the hottest companies that we've been talking about for the few years, OpenAI, Anduril, Anthropic, SpaceX, until recently, have all been in the private market. And there's so much growth that happens in the private market. So what we do is we look for companies between a $1 to $10 billion valuation, generally, all right, that we believe can 3 to 5x within 3 to 5 years. Okay. And we follow an investment thesis. We want to see revenue. All right. We want to see real numbers. And if a firm, like a venture firm like Andreessen Horowitz or Sequoia or Lightspeed or any one of these big firms comes in, they do rigorous due diligence on any investment that they make. So you kind of know, like, okay, if I'm investing into a company that Sequoia invested into, I know that this company has been blessed. Essentially, I know that this company has had the best experts within the industry. If it's for quantum, there's quantum experts making sure that everything adds up and that this is actually a promising technology. If it's defense tech, you know that the best in defense tech have actually analyzed all the technology and essentially said this is worth investing in. So you're not investing blindly. All right. You're investing alongside the best investors in the world. And I mean, this is the place to be. It's not the asset class for everyone. It's not open to everyone, right? It's only open to accredited investors and qualified purchasers. But for those who can participate in it, building a portfolio within this space has proven to be something worth doing.
Definitely. So now I wanted to move a bit towards the asset management side. And how do you go about building an investment slash asset management firm? Starting from zero, raising capital, developing the theses. Building the LP relationships, and doing the due diligence. How exactly did you start your firm? And for a young person like me, starting out an asset management firm, what would you recommend? And like how exactly someone gets into this space, and what do they require to get into this asset management business, and absolutely starting from zero.
Yeah. So I would say one thing that's really important to do is, first of all, you have to develop a thesis. You have to analyze the market. You have to learn what's going on. You always have to be reading. Read the Wall Street Journal. Read TechCrunch. Watch videos. Watch this podcast. And always try to keep up with what's going on, because if you don't know what's going on in AI, everything is moving so fast. That's what people are looking for. People who actually know what's happening, people that actually understand the technology and the business models behind these companies. So that's first and foremost. But I'd say for you, as a young guy, I think what we need to focus on is we're out here competing with killers, all right? Killers, guys that
Definitely.
have hundreds of millions in assets under management, hundreds of families that they're working with, big institutional investors. So how are you going to make yourself different? How are you going to stand out as a young guy? You have to use leverage, apply leverage. What can you do better than someone who's older than you and more experienced than you? So what I would say, and this is for myself, you partner with someone who is an expert on the diligence side. All right. In terms of the research and actually analyzing deals. And I've been very lucky to work with Aaron Dillon. People can check out his channel, AG Dillon and Co. We do a podcast every week together. You can check out the Cap Table podcast. And he's an expert. He's an expert in the secondary market. He's been on Wall Street for 25 years. So it's great to partner with someone who knows what they're doing. Where you can apply leverage and where I'm applying leverage is I think, and this actually goes into a larger thesis. I think that the need for faces to put their opinions where their money is, or I should say, their money where their opinions are, is growing very, very quickly. And now the biggest, you could say, financial or investment creators or influencers in their space, they're publicly calling out the companies that they are actually investing in. And I think that's very important because one, it shows that like you have conviction. All right, you're putting your money where your belief is. And two, if you can create content around that, I mean, that's how we got connected, right? It's like,
Yeah,
I'm based right now. I'm in upstate New York. You're in India, and it's like, who in the world would have thought that we'd be connecting with each other? We're connecting with
definitely.
each other because the internet has opened up so much opportunity for worldwide communication. And if that's what we're doing with our investment firm is we are bringing knowledge and clarity into the private companies, an industry, in a market that historically hasn't had much clarity to it. We're trying to break down the companies as best as we can for our investors so that they can go in being more informed and better educated when executing on these investments.
Okay. Pretty, that's pretty comprehensive. So, how does the young guy, young folks like us, how do we go about sourcing these kind of strong opportunities and, building the access? Because in private markets, I think access is the biggest leverage. The people who know you and the people I think that's the most important part because if you know that, let's say there's a company and it's doing great, its financials are good, the company's management is credible, the company's growing fast, and it's valued below what it's actually worth. Let's say it's a fantastic investment, but if you don't have the access, you won't really be able to execute upon the research or the intuition or the insight. So how do you go about building that particular access? Because I think that's the most important thing according to me.
Yeah, that's a great question. How do you go about building access? Listen, if you're tapped into the private markets at all, and you create any sort of relationships, if you just get your foot in the door with one guy, you'll have deal flow. Okay. Now you got to make sure that that's someone that you trust. You don't want deal flow from some guy who has a fourth layer Anduril SPV that's essentially, excuse my language, like horse crap. That's basically nothing. You don't want that. All right. You want to go after people who you trust, who, ideally are on the cap table of a certain company, who have who have inside information, who can give you extra insight. So as long as you like, just you have to put your name out there and you have to network and you have to message people. It's not too hard to actually find your way in. Now, securing allocations, this industry is basically 80% demand, 20% supply,
Yeah,
right? So, 80% of people out there, they wanted Anthropic. 20% of funds were actually able to offer real exposure to Anthropic. And this is like a theme that happens over and over and over again. And oftentimes, like with Anthropic or some of these other companies, Neuralink, for example, where there's essentially no liquidity on the market. Anthropic, now like that they're eyeing an IPO, there actually is a little bit of liquidity. But um, these are companies that are very difficult to get. But I think that the best thing that you could do is just kind of shop around the market, um, see what you can find, and then go to your LPs and say, "What do you want? What do you want?"
yeah.
You obviously have to have a thesis and present that to your LPs, but see where there's critical mass, and then when there's critical mass, everyone's like, you know what, we want this company. Go out there and do something about it. Find the people who are on the cap table. Find the people who are talking about Saronic online. Find the people who are publicly saying, I invested in Saronic. Connect with them. Maybe they can connect you with someone else. People are pretty nice, actually, like from my own experience. So, if you come in with good intention and you're honest, I think that people are actually pretty willing to connect you with investment opportunities.
Definitely, definitely. So, I wanted to focus a bit about how an asset management firm operates, the raw realities of running an asset management firm, from the client facing work to the operations to the hiring to the diligence to the trade execution. What kind of a team do you require, and how do you go about building that deal flow as well as the team, the right talent, the right opportunities, the right access, and Can you tell us a bit about how an asset management firm operates and the raw realities of it while starting out?
Sure. So, listen, I think that, number one, what's essential is find someone who's smarter than you that you can trust, that you can work with. And for me, that's Aaron Dillon. Working with him is amazing. He has all the experience. And if I ever have a question, or something I just can't answer, if an investor asks me a question that I just don't know the answer to, I can go to Aaron and he almost always can answer that question. So I think that that's essential. But in terms of hiring, Ariane, like we're in like this like crazy period of time where if you really know what to leverage online, all right, and the certain tools that you can leverage, you don't need a team. I don't need a team. I don't. It's all about relationships, that's for sure. And I have some people that I work with on essentially like free contracts where I can just go to them and they can do X Y Z for me. We obviously have like a media team, but keeping people on a payroll, I don't think is what you need to do anymore to build a real business. All these tools are accessible to everyone and they're so powerful. Learn how to leverage them. And once you learn how to leverage them, you can outsource so much work that an employee otherwise would have to do. So for myself, and I'm noticing this with a lot of other fund managers and creators in the space, you don't need a team anymore. All right. This isn't like 2010. We're in a completely different time where you can automate so many different workflows and you can be so efficient if you're just focused. That is the currency today. Focus, attention. All right. And if you can give that to your own business, then you can build out all the tools that you need without hiring people, at least, at the scale that we're working at right now. And I mean, even others, like I know someone who manages a $400 million fund. It's just him. I'm sure he's in operational hell, but like he could do it by himself and he's returning,
Definitely, definitely.
has a great ROI for his investors. And that's really all that matters in this business. Get ROI, get assets under management, get good access, get good returns for your investors. That's what matters most. And you don't need a team to do that anymore.
For real, yeah. I think this is gonna be the first generation of people who are gonna build a one-person company that can be worth $1 billion. That's gonna be the first time in history. It hasn't happened ever before, and I guess this is first time ever with the coming of AI and all these tools that we can use to automate tasks, automate thinking, automate a lot of things.
Hmm.
I think it's very beneficial. So, before we move on to building a thesis and the capital allocation strategy and the fund management side of things, the last thing over here I would like to ask is that what would you do differently today if you were building your firm from scratch again? What would you do differently? And uh, yeah, I think how would you integrate these new technologies that are coming, and what sector would you be most focused on, if you were building the firm from scratch again?
That's interesting. I don't know if I would do anything differently. I mean, you kind of have to like learn. Who was it that said being an entrepreneur is kind of like it's the CEO of Airbnb, Brian Chesky. He said that being an entrepreneur is like taking someone to a mountain and then throwing them off the mountain, and they have to build their own parachute as they're on their way down. And I think that's like really, really true. You just got to go all in, and you just have to be able to adapt to your environment, solve problems, become a problem solver, become efficient, learn how to deal with issues that arise without getting overwhelmed. And I think the only way to do that is to like learn from failures and your experiences. So I don't think I would do anything differently with founding the company. In terms of building out a thesis, um, I think that the best thing that I'm doing right now is I do have like my own investment thesis that I do follow across certain industries, but it's so important to learn from other people. So I actually think that if you can like carve out enough time on social media to actually be focused and not just consume brain rot and rather focus on things that actually can increase your knowledge, listen to Gavin Baker, listen to Chris Camillo, understand where the best investors are focusing and what topics they're covering, what industry they're covering. There's so much alpha to be gained just by tapping into the voices that are most informed. So for me, if you can like just, cut out the brain rot. There's no time for brain rot anymore. We don't have time for that anymore. There's too much to learn. There's too much opportunity. Cut out the brain rot and listen to the people who are actually making a difference and leading the industries in terms of knowledge. All right. That's my advice to people, really. If I was starting over again, I'd probably just spend more time researching, listening to what these people are doing.
Okay, sounds interesting. So, let's say you had a strong thesis in place, and you knew exactly where to deploy the capital, the exact companies you were going to deploy, the exact position sizes, and everything. How would you go about pitching it to LPs? Reaching the capital, because that's what limits, I guess, most of the funds. Because I've been working with AIFs, quant funds, hedge funds, and the one and only thing that limits them is the fact that there's a gap between where they want to be and where they are, and that's the capital and the limited partners, as in the LPs who invest the capital. Because without that, you don't actually have a fund if you don't have the capital. So how do you go about building those LP relations? Especially, how do you go about building those LP relationships online with the coming of all these various social media platforms like LinkedIn, YouTube, and many others? And how do you get them to trust you, and most importantly, get them to back you? Uh, because investments are a game of trust, and you can't find anyone to back you unless they trust you. So how do you build that trust and get them to invest in your fund?
Sure. Well, I've been very privileged and very blessed to have grown up in a very tight knit community where people know each other. I'm Jewish, as people could see, and one thing that I think is so great about the Jewish community is, every Saturday you observe Shabbat. You go to synagogue and you see your people, and people can kind of get a sense for you. And I think that people at this point have a nose, for BS. And if they're like, what's this guy about? Then I think it's a little bit harder for people. But when you can come to your investors and you can just present, here's the thesis, here's all the research that we've done behind this company, here's all the due diligence that we've done, and then you present it to them, I think that people actually appreciate that. And you can't really look at yourself like, oh, I'm trying to get these people to buy like a certain. It's not like that. It's like you're trying to place people into investments so that they can build wealth for themselves. Like, people want to invest. They need to invest, especially with what's going on with inflation and the world is just getting so much more expensive. People know that you can't just keep your money in your bank account anymore. It's a depreciating asset. It's sad to say, it is. But if you can invest in the right way, people are always looking for the best alpha. All right. And if you can be the person that always answers the phone, right? Always gives, if you don't know the answer, be honest. I don't know the answer. I'll have to get back to you. I'm sorry, sir. I don't know that answer. Do all the research that you can. That's why we do these videos and we do articles and we do reports, so that we show we've done as much research as we possibly can. Here are all the facts. We believe this is a great company. And generally what I've noticed is people are like, they take a look at our fact sheets. They're like, oh, this is a good looking fact sheet. They see our videos. They're like, oh, this video has a bunch of views and a bunch of comments and is clearly really well thought out. That's enough for me. Who else is investing? Oh, Sequoia and Nvidia Ventures and Toyota Ventures. Okay, I'm in. That's been my experience. So you got to stand out somehow. You have to build trust somehow. And that's our method of doing it. All right. Just being completely transparent, always being honest, and trying to give the most informed research that we can.
Sure, definitely. So let's dive a bit into the capital allocation and building the thesis. So, how does one go about the portfolio construction and the position sizing, and diversification, and industry selection, and how does one research the markets, and find that, hey, let's just get into this pre-IPO venture back pre-IPO secondaries. How does someone find that niche, if you call it in today's language? But how does someone build that thesis actually in practice, and what are some of the credible sources they can refer?
Sure. So I'm going to mention a couple names right now, because whether you're investing in the public or private market, we're all investing in innovation, right?
Yeah.
We're like, the companies and the countries that can innovate the fastest will dominate. the next decade. And,
Yeah.
and honestly, I think much more. So for certain industries, I have certain voices that I really like. For AI infrastructure, Aaron Dillon is amazing. They post incredible research. Gavin Baker is great. For finding alpha, asymmetric upside, Michael Second is great. John Coogan, TBPN. I like listening to what those guys are doing. Everyone on the All In podcast. These are all sources of information that it's just important to be tapped into what these guys are doing, because these guys are essentially at the front of research, and you always want to be keeping up with research. So, in terms of developing a thesis, you follow these people, you see what makes the most sense, then you do the actual research on the backside. And we used like Sacra and, private market software to see what companies are generating revenue, what industries are most promising, what's around the corner. That's your job. Find what's around the corner. All right. And if you could do that, then you're going to make your investors really, really happy. So, I have a few different theses across a few different industries. So, first is, people love this stuff, defense tech, right? Everyone thinks that Anduril's like the coolest company ever. We've seen what happened with Palantir taking off, and autonomous weaponry is, I think that everyone can agree, like this is increasingly coming onto the scene. Why would we waste and risk human lives out on the
Definitely,
battlefield
definitely.
if we can send autonomous weapons to do so? So I think that a lot of people would agree with you, Ariane, and be like, yeah, that makes sense. So I think that we're seeing a generational build out, especially with the instability in the Middle East, and now, in Eastern Europe as well. And, all the tensions that are around Pakistan, India, Taiwan. People want a little bit more security, and the US is obviously dominating when it comes to defense tech. So that's one. All right. That's one industry, defense tech. It's almost like CapEx, like AI infrastructure CapEx. It's like there's $1 trillion build out happening in defense.
Yeah.
That's like never happened in history before. And like these contracts are going to go to the companies that can innovate the most and actually provide the best products. And we're seeing like the entire model flip on its head, where, you used to give Lockheed and Boeing, like these companies, all the money that they needed to actually build these products, and they would always be late. And now we're seeing companies like Anduril come on the scene saying, we're going to build first, we're going to build at scale, and then you could buy as many as you want. And I think that's much more attractive to the US government. And I think it's much more attractive to investors, honestly. So that's our defense tech thesis. Autonomous weaponry, and essentially these technologies that are going to keep American lives and, lives all over the world of American allies more
Yeah.
safe, and countries more protected. So that's our thesis on defense tech. AI infrastructure, I mean, this is like the biggest thing that everyone's talking about, right?
Definitely.
Memory, compute, inference. I'm of the belief that inference is going to be one of the biggest markets ever in history. It might even trade on like its own market completely. The CEO of BlackRock, Larry Fink, was talking about this a while ago. He said that there's going to be other markets trading just based on inference, because I don't know, Ariane, like I'll ask you, like if you had unlimited time to prompt Claude and train models and do essentially output for AI, you would probably be
Yeah.
using it all the time.
Definitely, definitely.
Yeah. So we're of the belief that like this is an insatiable demand. Inference, training models, whoever has the best model is going to win, and the more inference can train those models, and then high level, the fastest inference, delivering answers super fast. I think that's really important too. That's why OpenAI is developing Jalapeno. Why companies like Etched are super exciting. Why NVIDIA bought out Grok for $21 billion. So these like inference, memory, we're very interested in that sector as well. The space economy is developing in a very interesting way. It's funny. I'll share a quick story. I remember I was pitching someone SpaceX at a $186 billion valuation. This was years ago, right? The guy said to me, he's like, it's a little bit high, don't you think? Like, it's a rocket company. And I was like, maybe it is a little bit high, but I do think that they could still go up. Like if the space economy develops in any sort of way whatsoever, this company will be at the forefront. And we know what happened with SpaceX, right? That was like,
Definitely, definitely.
a great one. And then more recently, someone was like, I think that you even mentioned this to me, actually. It was someone else, though. They were like, I have Blue Origin at 180,
It was me.
essentially
Yeah, it
like
was me.
this. Yeah, yeah. So it was you and also one other guy that mentioned it to me. And I remember thinking in my head, I was like, it's a little bit high, isn't it? But I'm like, if history says anything, like, I'll be wrong. This is going to be like another $1.8 trillion company in a few years. So we're going to see what happens with the space economy and how it develops. But I mean, this is like the most exciting time to be an investor ever. Like I'm in love with what I do. Like this is awesome.
Definitely. So how do you go about risk management and managing liquidity in private markets? Because a lot of the funds have a lock-in period, and let's say if you are investing by yourself or like a as a fund, do you personally advocate leverage? Let's just take the case of Leopold. He was at a 4x 3x leverage in his portfolio, and that was one of the reason why he could go from in the 100 to 400 million range to directly $50 billion range. So yeah, I'm not maybe these aren't the exact numbers, but should you be taking leverage in investing in general? If you're there for the middle term period, meaning 5 to 6 years.
Yeah. Well, first I'll start off by saying this is not financial advice. Everyone, investing is risky. Do your own research. Listen, I think that if you're in the public markets and you're a full-time investor, I think that there's room for leverage. Like for me, I'm in the private market and I would not advise anyone to use serious leverage in the private market, which is largely an illiquid market, right? Like you don't want to tie up your money forever with 4x leverage. That's crazy. Maybe if you're like a really bullish VC firm and you know something that others don't, you could do it. But I would never advise my people to do it. I wouldn't even advise most of my investors to put the majority of their portfolio into the private market. This is what you could say. Listen, we look for the best risk adjusted return for our clients. Risk adjusted return. I'm not like a Series A investor that's just like trying to throw a bunch of bets at the wall and hoping that one of them hit. We're going for companies with real revenue, real promise. That's what we're looking for. Okay. So that is like different from other venture firms, I can say. If you're in the public markets, I think it's a different story. I know that Chris Camillo, who I'm a huge fan of, is like really leveraged into Amazon. And I actually think like that's probably a great bet for him. Like Chris can afford the capital call if he needs to. And I mean, Amazon's killing it. I think like he's right in saying that they're going to be the company that benefits most from the AI efficiency wave. But for the private markets, keep the leverage out. Keep the leverage out. Get yourself some exposure. If you're an accredited investor, get yourself some exposure to nuclear, get some exposure to inference chips, get some exposure into some really promising defense tech companies, but don't leverage it out. Don't bet the whole house on everything. We got to diversify and build good portfolios. Don't just rely on one company.
Definitely. So, one of the sentences you mentioned, brought me to this particular question. So, what is your particular investment framework? What are the check boxes that you go through before investment? Let's say, is the market growing? Is the company best of its kind in the market? Is the company growing? What are some of these kind of checklists that you follow before doing an investment? I don't want to get into the nitty gritty technicalities, but just a general framework that you use for investing, especially in the emerging technologies, meaning defense tech, nuclear, renewables, AI infrastructure, GPUs, quantum computing, and whatnot.
Yeah. So one, like I said, risk adjusted return, right? We're not just throwing random bets at unprofitable companies. We like to see revenue. We like to see free cash flow. Everyone worships EBITDA, but there's very little transparency into EBITDA in the private market. So you just want to see like promising revenue. You want to see real numbers coming in. You want to see a real business model. I think that people have gotten a lot more savvy in cutting through the BS, with like, I don't know, these companies that come on that promise something bigger than they can actually deliver. I don't want to throw any companies under the bus, so I won't expand on that. But for us, we want to see real revenue. We want to see a real plan towards liquidity. We want to see a liquidity event happen. of course, and we aimed for a 3 to 5x within 3 to 5 years. So, I guess when looking at certain industries, Jensen Huang, the great Jensen Huang, says that there's like a 5-layer cake to investing, okay? And the bottom line is energy, all right? That's going to power absolutely everything. And
Definitely.
energy is it's actually different than the rest of the categories because, first of all, energy isn't a winner-take-all. There are going to be a bunch of winners powering like the AI revolution. Whatever industry it is, there's an insatiable demand for energy. The more we have, the more we can innovate. So I really like small module nuclear reactors, just like Valor Atomics or ALO. They're doing great things. And I think that they're going to power the future. I said this in my past video, but to secure power on America's largest power grid, prices are up over 800% for future power. So it's like we need to get off the grid. All right. And I think small nuclear reactors are the way to go over here. So I really like that for the energy level. So I'll go through each one of these, right? So then the next is chips. The level above energy is chips. This powers everything else. And like I said, I really like low latency inference chips. So companies like Etched, Positron. I love Positron. That's an amazing company. Like I think they're an amazing company. I think these companies are going to do really well because this is what all the rest of the infrastructure models, applications are built upon. Okay. So, with chips, you want to see, NVIDIA is obviously killing it. So like, they're like kind of the king of like that line. But just to take it a step above, if you want to go above chips, it's the infrastructure layer. And this is where you have, so I actually think the infrastructure layer is really broad. Cybersecurity, I see as critical infrastructure for
Definitely.
AI. Other industries like GitHub, Databricks, your data management, that's all within the infrastructure layer. And this is like the biggest build out that we've ever seen. Vast Data is an amazing company. Software that can squeeze more out of these chips. Descartes is an incredible company. They're, exploring a buyout right now. The companies that can squeeze more out of these GPUs, out of the TPUs and the Trainium 3s, I think are going to do absolutely amazing. If you go above that with models, you want to see like the frontier models. I'm very interested to see if there's going to be a private company that can actually lead the open source race. I have a feeling that NVIDIA, Palantir, or Meta will be the biggest players in that space with open source models. But I think that open source is going to be massive. And I still think the frontier models are going to do great as well. So, the more, for model investing, I think that you want to see that they can lock up GPUs, which are used to train AI, and that they have high inference output chips. So, Cerebrus, the Grok LPU, which was obviously bought up by NVIDIA. I really like to see those, but I want to know that they have an allocation of GPUs because everyone's waiting years to get these GPUs otherwise. So if NVIDIA is on their cap table, that's something that I want to see when I'm investing in model companies. And then we have like the holy grail, which is really coming onto the scene right now, which is application companies. So Glean, Harvey AI, companies like this. And for this, I think it's actually super important to look at what Palantir did and how they became successful. You need to, all right, like in enterprise AI, you need to see ROI or else things are just going to burn and fizzle out really quickly. So what I like to see here is forward deployed engineers. All right. I want to see someone come in and create the entire workflow. And Ariane, like if you're running an enterprise AI company and then you have Joe who comes in and automates your entire workflow and knows your business like the back of his hand, and it makes your company way more efficient and then essentially ensures ROI on your token spend, you're not going to get rid of that guy so quickly. And this is why I think companies like Harvey and Glean are really great companies. They're a little bit stickier, is because they have someone that essentially embedded the workflow in there and is ensuring ROI. And if they're not ensuring ROI, then they're going to lose the contract. But this is the Palantir model. This is how they were able to dominate their own vertical. And this is something that we look for, forward deployed engineers, when it comes to these application companies. So that's like essentially like my checklist when I look through the industries and I'm investing. This is what I'm looking for.
Okay, got it. So I was doing CFL1, and I came across a word called information asymmetry. What it like in simple terms, what it means is that the management of the company and the promoters and people, the insiders, basically know more about the company and the decisions and the future decisions, more about the general retail investors, and that's, I guess, pretty obvious. So how do you reduce this information asymmetry, especially for private companies, because the data is not accessible. It's all closed doors. So how do you reduce this information asymmetry? Because I think knowing the facts, knowing the numbers, knowing the decisions, knowing the people, knowing the governance, and the measures, and all the protocols, I think information is the key, that separates people who make good decisions and bad decisions. Obviously there are many more things to it, but how do you go about reducing this information asymmetry?
Sure. So asymmetry, I feel like I've heard this before. People describe asymmetry. I would say it like this. When you're looking at a company, all right, and you can kind of look down the line and be like, okay, fine. Like, I think that Leopold really hit the nail on the head with this when he was like, okay, AI is coming around the corner. Memory is going to be huge. And I think that memory still has massive room to grow from here. But when you're just like looking around the corner and be like, okay, what's actually coming? There are certain industries that have not changed at all. Like Ariane, like, has Instagram changed since AI came on the
Definitely
scene?
not. Nope.
Like, maybe there's more AI slop out there and it's actually made it worse, but like, has Netflix changed? Have video games changed? Like, there's so many industries that are about to experience the craziest disruption they've ever experienced. I think that GTA 6 is going to make more millionaires than so many like what's about to happen is going to be massive. It's going to be a massive
Yeah.
disruption. All right. And I think that if you can actually try to look down the line and just saying like, okay, like, I see where we are right now. Where are we going to be in 6 months? Where are we going to be in a year from now? What's the demand? What are we going to need to get to where we want to go? How are we going to build a greater society that can benefit everyone? That's what I'm trying to think right now when I'm investing. Like, okay, what's coming up next? And I'll end on this because I gotta scoot. But for those looking for asymmetric upside, find someone you trust, find an advisor, try to find some sort of clarity, high definition into what you're investing into. Look at what the future is. Try to understand what it's going to be. And if you find a voice that you really trust, just reach out to them. Just reach out to them. And there are a ton of great people out there. Us at Ross Pre-IPO, we're happy to speak to anyone accredited, qualified, who is looking to invest in the private market. We're happy to speak to anyone, show them our investment thesis, make videos, try to bring clarity to this very ambiguous and unclear market. So that's what we're doing for our own firm. And anyone out there who is looking to explore, find someone you trust, find an advisor.
Definitely. So the next thing I wanted to, focus on was that how do you, balance? I wouldn't say balance, but how do you weigh the price or the valuation versus the business itself? The core business, what they do, as in the underlying business and the demand for it. Because a lot of people, try to time the market, find for trend reversals, and there are all kinds of market transition phases, and there are all kinds of strategies, and technical indicators, and there are various kinds of analysis related to the price. So do you guys ever focus on the price or the valuation of the company, and how important is the price relative to the underlying business itself, and how do you weigh the two, and how do you balance between the two while making an investment?
Sure. So I'll try to be quick about this one since it's a little bit past my time and I have to jump on another call pretty soon. But I'm enjoying this, and this is great. So I guess my quick 2 cents on this is, listen, you have to look for accelerating revenues. What is the year-over-year run rate? How fast is the company growing? Valuation is a little bit tricky because it's like, I guess you could say that some valuations are misplaced, and it's anyone out there who's saying like, I know what valuation this is going to, no one knows. No one knows. It's about the alpha. How much more value can this company add? How much more demand for this product is there going to be? That's what you have to focus on when you're investing. right? Like, and you can see it in the numbers also. If you use Sacra or NASDAQ private markets, these are great softwares to use to actually explore and find alpha. Where is the company now? Where were they a year ago? How fast are they growing? What's the demand for this growing market? That's what I really like to look at when I'm investing. But Ariane, my time is up, man. I love doing this with you, and I appreciate you having me
Definitely,
on the show, man.
definitely.
This is great.
Okay, one of the last questions I wanted to ask, what advice would you give to the younger generation, like people like me, young entrepreneurs in their parents' basement, trying to build a $1 billion company, be it in any industry, investment banking, asset management, tech, there are various kinds of opportunities out there. What advice would you give to a person, just starting out, very young person? What advice would you give to someone like that, in this capital market space specifically?
Yeah. Well, I would say find what you love, first of all. Find what you love doing. I don't believe that it's always and the money will follow, but if you have a passion for tech, if you're very interested in investing, if you like just talking, to the industry leaders, find a way to add value. All right. We're not in a space anymore where you could just ask anyone, email anyone, and they're going to meet with you. Find some sort of way to offer them value, whether that's through content or through reposting someone's content, getting their attention some sort of way. That's how we're doing it. That's how we're separating ourselves. We're creating content into a market that's very unclear, but that's super exciting, and people love that. That's why we're one of the fastest growing brands online right now in the startup and venture space. But I mean, if you're young out there, keep doing what you're doing, Ariane. Like, this is amazing. You got me on the pod. You got some other great people on the podcast too. And I'm sure we're going to talk in a couple years from now. And like, you're going to have 1 million followers. This is going to be the biggest podcast in India. All right. You're going to have $1 billion in assets under management. I'm going to be calling you and I'm going to be like, hey, Ariane, you have any good deals for me? And then you're going to say, yeah, I got X, Y, and Z. And then we're going to take it from there. But, I think that you're doing great things. And the people who can really focus is the asset right now. Focus, attention, heart. How much can you actually give? Those people are going to kill it. So I'm betting on you, man. I'm betting on you.
Thanks a lot for those kind words. I was a absolute pleasure to have you on the show, and I really valued this conversation. It was really insightful for someone like me. I'm very much passionate about industries like AI infrastructure, data centers, quantum computing, nuclear. As I saw one of your videos. That was, I guess, the primary reason why I got researching about the nuclear sector, and companies like Valor Atomics. These are great opportunities. So thanks a lot for being on the show. If you have any thing you want to say to the audience, feel free to do so. Feel free to talk about your channel as well, and uh, we can depart after that.
Sure. Well, I guess I'll say if you guys are out there and you're looking for clarity and you're looking to understand the private markets, we cover the most important private companies in the world before they go public every single day on our YouTube channel. So you can go to our YouTube channel. You can find us on Instagram. You can talk to me on LinkedIn if anyone wants to connect. And yeah, I do a podcast with Aaron Dillon as well, the Cap Table Podcast. I recommend you guys check that out too. And that's my 2 cents, man. It was great meeting with you, Ariane.
Yeah, thanks a lot. Thanks for the show. Thanks for the conversation, and have a nice day. Yeah.
My pleasure.